I mix what I like, what I like, what I like, what I like, what I like. What's up, world? Welcome to another edition of I Mix What I Like right here at BPM. I'm Jared Ball, very happy to be your host. Fresh out the oven, so to speak, a new story that again confirms, most importantly, again, more importantly than anything, of course, is that it confirms that I was right. So let's just start there, get that out the way. But let's go. Let's look at this new story that just came out and some of how it is laid out and reverberates. So the story that just dropped, in fact, today, says what I had been saying would be the case and is unfortunately predictably the case, given the situation in which we find ourselves. The context determines it almost. But anyway, this new story out of Vox, published just today, February 16th. How crypto failed Black investors. The American financial system has long fallen short for Black communities. Crypto is just another iteration. Yep, I believe I had that, I think, as Larry David used to say. Crypto was sold as sort of crypto was sold as a sort of lifeline to Black communities, as a way to build wealth outside of the mainstream financial system that many people understandably mistrust. The crypto complex told the story of a potential for riches, a way for people out of more traditional financial apparatuses to get in, bombarding the Black population with marketing and ads featuring celebrities such as LeBron James and Spike Lee. The industry made it clear if you didn't get in, well, you might just be missing out. Many Black investors picked up what marketers were putting down, investing in cryptocurrency at higher rates than their white counterparts, especially Black investors under 40. Now, again, if you are a regular viewer of I Mix What I Like or the BPM platform in its entirety, then all of this will sound very familiar to you. We were, from the very beginning, covering the Spike Lee commercials, the LeBron James, and many others targeting Black communities. So just want to continue to remind of that fact. Continuing on here, crypto often goes through boom and bust cycles and is unlikely the ecosystem is dead. I will, of course, put everything I'm talking about today will be linked in the show description so you can read it in more of its entirety and the rest of it, all the links, etc. And of course, this will be added to the Cryptoganda playlist. So there's a whole playlist of videos from this channel and others that will show that we've been covering this and making this argument for a couple of years now. So continuing here, still, Black investors were not generally among the early group to dive into crypto, as the Atlantic's Annie Lowrey notes. And with all due respect to Annie Lowrey, again, this is a point I have been pointing out for a long time, that while cryptogandists belatedly jumped in to tell Black people to get involved, it was already too late. I made this point with the debates with Reggie Middleton, with the gentleman of crypto, having read Isaiah Jackson's book, Bitcoin in Black America. All these points were already made. It's already bought up. We detailed the billionaires that were already involved, talked about how major investment groups, Citibank and JP Morgan and BlackRock and the CIA and the NSA and everybody was getting involved in one form or another, whether either investing or surveillance or whichever, meaning that for all the reasons that we were being told crypto is some alternative, it was not. But anyway, continuing here. Instead, many of them got in late, meaning Black investors. And some appear to have bought high and sold low. Again, I'm just going to, it is what it is, but I'm just going to keep saying, again, pointed this out. According to a recent Lending Tree survey, Black crypto investors were likelier than white crypto investors to say that they had borrowed money to make their investment and that they had sold their crypto for less than it was worth. In other words, some Black investors have been left holding the bag. Um, Again, the article brings back and they interview Marisa Baradaran again, who talks about the issue of black banking, going back through the history we've covered here over and over and over again, even in some discussion of where Baradaran is being referenced in these stories, but then is anyway. I don't need to continue to belabor the point. Um, her book details why black banking isn't a solution and how and why that argument continues to somehow be reframed and branded to support black capitalist and mainstream black political solution arguments is confounding to me. And I'll just leave it there for now. I don't want to continue to keep coming back to that point. Yeah, I don't want to keep coming back to that point. So that was really it from this initial story, because then it goes into Baradaran and the issue of banking, and but what it does do is make reference, at least in passing, to something else that I wanted to look at, and that's the work of Algernon Austin and the Center for Economic Progress, I believe it's called. I think that was, yeah, that was all I. Yeah. Yeah, and it just gives some examples of some self-reported loss of black investment in crypto, and then comes back to Baradaran's discussion of black banking and its shortcomings, and leaves us with fraud and mistrust are what have led many black consumers to faulty offers and products over and over again. The latest iteration is crypto, but it probably won't be the last. So again, making the point that been making here for a minute now, this loss in crypto was just another in a long line of fraudulent claims being made by capitalism and black capitalism, et cetera, and so forth. But what that article did do, and again, all will be linked so you can follow up at your leisure, is point to some other existing and new research that has come out earlier this year, which again, just sounds really familiar or predictable, at least. So this is Center for Economic Policy Research. I'm sorry, Center for Economic Policy Research. And the contact person is Dan Beaton, but I believe this is, or we're going to get to eventually, the work of Algernon Austin, or maybe this is the summary of the report that Algernon Austin has put together. By the way, check out imixwhatilike.org and else, I think on our platform elsewhere, for previous interviews I've done with Austin, and even where I've told one of my favorite stories about a gathering that he was a co-convener of that I passed through, but maybe we'll come back to that another time. Anyway, so this one, new analysis shows risks of cryptocurrencies for black investors and others. Crypto has largely underperformed the stock market over the past 5 years. New analysis from the Center for Economic and Policy Research shows that, contrary to much of the hype, black investors and others would have done far better investing in the traditional stock market over the past 5 years rather than buy cryptocurrency. The risks of investing in crypto go far beyond FTX and Sam Bankman-Fried, co-author Algernon Austin said. The simple comparison with stock market indexes shows that crypto has failed to deliver to its investors. It's often a money loser, and there are many other risks and pitfalls as well. Yet we continue to see crypto touted as a boon to the black community. The analysis by Algernon Austin, Julia Tash, and Timi Iwayimi shows that someone purchasing $1,000 worth of crypto from the top 1,000 currencies 5 years ago would likely have seen the value of their investment drop to little over $500 today. In contrast, if someone had purchased $1,000 worth of total stock market or S&P 500 index fund, this would have increased to about $1,600. By the way, just quickly, the amount of Black people or others who would have $1,000 to spend on purchasing stocks or crypto is pretty low. And even if they did, even those investments would have either lost money or earned not life-changing changes. So again, if you don't have money, the stock market is not likely to produce money for you, even if you get lucky and bet correctly all the way through without these kinds of losses. The analysis likewise shows that the stock market index funds outperformed cryptocurrencies in the 4-year period 2018 to 2022 and the 2-year period 2020 to 2022. Cryptocurrencies only outperformed the stock market in the 3-year period 2019 to 2022. In the year 2021 to 2022, which is contained within that 3-year period in which cryptocurrencies did outperform the stock market, both the stock market and cryptocurrencies experienced significant declines. The value of Bitcoin, for example, declined by 60% from the start of 2022 in the middle of the year, but the stock market declined by less than 20%. So even if you did okay within these 3 years, this last of that 3rd year, and then after 2022, you would have, if you didn't get out by early 2022 basically, and maybe get in early 2021, you probably didn't do well. And then even then, to my point about up here, if you didn't get in with a whole bunch of money and get out right on time, you still probably didn't make that much money. Cryptocurrencies, Black Crypto A and Black Crypto B, started by Black entrepreneurs and marketed to Black investors, likewise have significantly underperformed compared to the stock market index funds since their creation. Now, to be fair, in all that I'm saying, I have said, and I told you so, this would be one aspect that I had not covered and paid attention to. So shout out to Austin and CEPR for catching this part about the specific currencies created by Black entrepreneurs. I was focused mostly on the nonsense from Hill Harper and everyone and Roland Martin and everyone telling Black people to invest in Bitcoin, and had not paid attention to these 2 examples of Black cryptos created by Black entrepreneurs, and predictably they didn't do well anyway. So the CEPR analysis shows that while it is possible to gain significant wealth from cryptocurrencies in a short amount of time, it is more likely for a cryptocurrency investor to lose money. In addition, cryptocurrencies are subject to corruption, overprinting, excessive control over investors' accounts by exchanges, excessive fees, and especially slow transaction rates, among other pitfalls. Cryptocurrencies have yet to prove they are anything but another get-rich-quick scheme, Austin said. Looking at crypto's track record so far, it doesn't look good. All right. But again, we're not done. We're not done because I kept clicking. And I wanted to see the report itself. As I enjoy, I'm just playing. I really don't enjoy the fact of my being correct. In other words, the overall impact of the accuracy of the analysis, because it just returns us back to the horrific colonial conditions we exist in, and the ravages of capitalism, and et cetera and so forth. So it's predictable. It's in some ways, I think, even easy to predict. But I don't want to, even if I'm not thrilled with Black people playing this stock market game, I don't wish that they would lose money or whatever. But it is predictable. So here's the report. Stock market index funds can beat crypto on cryptocurrency. Stock market index funds can beat crypto on cryptocurrency investing and building Black wealth. Why are my notes showing up though? Where are my notes though? Why are they not showing up though? Are they here? Oh, they are here. Okay. from a public relations perspective, 2022 was an awful year for the cryptocurrency industry. The value of Bitcoin and other popular currencies lost more than half their value. Several major bankruptcies, scams, and frauds associated with the industry surfaced, with the FTX Sam Bankman-Fried scandal only being the most sensational. While 2022 was bad for crypto industry, it was useful for the public to see some of the potential downsides of cryptocurrencies instead of simply hearing the hype from industry paid advertisements and crypto investors. I hope that this is true. In other words, the point that it was useful for the public to see some of the potential downsides. In other words, I don't know that if that is going to sustain during the next wave of what will become whatever the next Cryptoganda version push for Black capitalism to solve Black people's conditions. But continuing here, the economists Juliet Elou and Maisha Williams, however, provide a somewhat more pessimistic view of cryptocurrency investing for Black people. Their financial model predicts that white investors will benefit more from cryptocurrencies than Black investors. Thus, at best, the existing white-Black wealth hierarchy will be replicated in the cryptocurrency space. At worst, cryptocurrency investing will widen the Black wealth divide. So, again, I'm not a trained economist and did not create a model per se in the way that they did here, although the model I was working from made the exact same prediction and proved to be correct. That is, if you are already in an unequal position and incapable of making major investment, even if you get lucky with that investment, you're not going to close any gaps. I had already showed how the elite were already dominant in investing in crypto. I even showed the data that demonstrated that most of Bitcoin was already accumulated in a handful of elite wallets, meaning that there was not going to be any catching up capability for Black people, despite what Hill Harper, Roland Martin, and others were saying. And I even predicted and suggested and showed some early what would have been evidence that the Black wealth hierarchy that they describe here is not going to change. So the Black-white wealth hierarchy that they describe here is not going to change. So it's nice to see that our models, different as they may be, and methods different as they may be, are reaching similar conclusions. As they say here, notably, Black investors are more likely to be misinformed. Now, this was definitely where I was making my argument. Additionally, probably as a result of heavy marketing by Black celebrities, and marketing via social media popular with Black audiences, Black people are more likely than white people to be invested in cryptocurrency. And we already showed you that data. I wrote a little bit about it myself, etc., etc., etc. There's another way that lower income individuals lose money from conducting financial transactions and cryptocurrency fees. The Brookings scholar Tonantzin Carmona argues that cryptocurrency transactions can be quite expensive because there are network fees and then additional fees charged by crypto platforms such as exchanges, trading apps, and ATMs. Her most shocking example is for remittances, and we've covered some of this already, talking about Bitcoin ATMs, etc., and so forth. The challenges of studying the Black crypto wealth. Many of the claims about the benefits of cryptocurrencies do not hold up to scrutiny. There is one final claim to consider. Do cryptocurrencies help Black people to build generational wealth? One way to examine this question would be to have a good sample of Black crypto investors and detailed information about their crypto investments over a sufficient period of time. This sample and data are difficult to obtain. While Black people are more likely than white people to be invested in cryptocurrencies, it is still only a minority of Black individuals, a minority of a minority with these investments. A national random survey would have to be very large to obtain a good sample of Black crypto investors. This would be a fairly expensive survey. While self-report data about whether cryptocurrency investments are profitable can be useful, it is far from ideal and not likely to be very precise or accurate. Individuals may not know how well or poorly their crypto investments are doing. For example, the personal financial YouTuber goes by the moniker Beat the Bush, has about 1 million units of cryptocurrency Dogecoin. He recently showed that he had thought it was trading at about 11 cents per coin when it was only about 8 cents. at around 11 cents, he would be making a good profit. At about 8 cents, he would be more or less breaking even. But he wasn't actively tracking the investment. He did not have accurate information. Investors may have inaccurate guesses about status of their investments in the self-report data. So for me, that section was important because I did reach out to Algernon Austin to ask him to basically to ask him to consider components of my own argument that specifically here the reference is made to Moniker, who is of Asian descent and whose YouTube channel is not targeting Black audiences. So my point to Austin was, could you consider some of my own argument around the Black cryptogandists who are targeting specifically Black audiences in this very same way, and see if any reporting can be done to assess their claims? Because that's one thing I haven't done, is to track the claims of Earn Your Leisure and Ian Dunlap, and in terms of the specifics of maybe what they've invested in or what they've said or self-reported about their earnings or losses, if they've said anything. I haven't been paying that level of attention. So, and if the work here is around the impact on Black investors, I think Austin and others would be better served to look at those that I was being critical of and maybe add some depth to that critique. Additionally, self-report data may be affected by what is known as social desirability bias. Survey respondents may give responses that would present themselves in positive light, of course, which is why even in my own argument around Cryptoganda, I was saying the Earn Your Leisure crew and Ian Dunlap were telling people initially, Black people invest in crypto, get in your Bitcoin, get all your da-da-da-da-da. And then when it started to collapse, they fell back on, I told you should have been listening more carefully. I told you not to overdo it with that and to spread it around to real estate, And then we came back, I think, last week or earlier this week to show that even that doesn't work. The real estate, there is no real estate to buy. Anyway. So, but the specific point here is that CEPR is doing something a little more, seem to be trying to do a little bit more to look into the claims of those in those social media spaces promoting crypto and to see what they were self-reporting. But again, Beat the Bush, that is, he goes by the moniker Beat the Bush. I kept wanting to say his nickname was Moniker. His moniker was Moniker. But Beat the Bush is, again, not one of those cryptogandists targeting Black audiences. So I thought that I would like to see if they would maybe look at some of those other folks. Lacking quality data by race, the exploratory analysis will simply compare the gross of the value of randomly selected cryptocurrencies with two index funds. A comparison is also made between two cryptocurrencies that Black entrepreneurs started. So again, this is their report showing how well these investments did versus the stock market. And then they even picked up two coins created by Black entrepreneurs to show how they performed in admittedly a shorter period of time, because it hadn't been around long enough. And that's why, as I read a minute ago, they were talking about the potential shortcomings of the report of the research and how they would have preferred to have something that was over a longer period of time, but it's just not possible at this point. Since the individuals encouraging Black people to invest in cryptocurrency speak about building generational wealth, the ideal comparison would be over something like 25 years. However, most cryptocurrencies are very new. So before we continue, let me show you this group because they are new to me, and that's why I'm glad that to have been introduced to this work, because I didn't know about Equity Coin, the first digital token on the blockchain backed by affordable housing. So I don't know much about their claim other than what was in the CEPR report about them saying that the crypto investment space will help close generational wealth. the new sharing equity economy by developing the infrastructure needed for real estate equity sharing, namely managing and arranging for co-ownership of real estate on the blockchain. Tokenizing real property allows a token holder to purchase fractions of property portfolios. So that must be the coin that they're selling in relation to this, or we're promoting in relationship to this product. And this is the team that brought this to the market. All right. So again, I don't pretend to know anything about this. I just wanted to show you who this report that I am going through from the CEPR is talking about. And that their claim is that they will build generational wealth. Figure 1 shows cryptocurrencies listed on the Coin Market Cap site by their year of creation. Coin Market Cap is just the site that shows you how coins and crypto are doing. Among these currencies, most are less than 2 years old. It should be noted that the newness is one of the risks of cryptocurrency investing. Just as most new businesses fail, many of the new cryptocurrencies are likely to collapse. Daniel and her colleagues state many of the booming cryptocurrencies popping up, left, and right are destined to go bust. Because a longer time frame analysis is not possible, the primary analysis will be on the 5-year period. Let me just check this here. Yeah. That is the primary analysis will be on the 5-year period from August 30, 2017 to August 30, 2022. The analysis will begin by comparing the 5-year growth of randomly selected cryptocurrencies with 2 stock market index funds. So this one shows the majority of cryptocurrencies on CoinMarketCap are less than 2 years old, with a huge spike produced around 2021. They go through a little more of their methodology. Index funds cannot, and they show here how index funds can outperform cryptocurrencies. Typical crypto was down, and here the stock market and S&P 500. It is worth examining cryptocurrencies started by Black entrepreneurs, since these currencies are sometimes marketed specifically to Black investors. There are at least 2 Black-founded cryptocurrencies in the CoinMarketCap database. These cryptocurrencies, like cryptocurrencies generally, are very new. Black Crypto A is only old enough for a 2-year analysis. Black Crypto B is old enough for a 1-year analysis. Index funds outperform Black-founded cryptocurrencies. Total stock market, 12.3%, 13.9% for the S&P 500, minus 40% for Black Crypto A. Even when the total stock market and S&P went down, Black Crypto B went way down. Figure 3A shows that Black Crypto A declined in value 40.8% over a period when the 2 index funds increased in value 12.3 and 13.9%. Figure 3B shows that Black Crypto B declined in value 94% over a period when the index funds only declined in value 14.5 and 11.9%. Again, the index funds are strongly outperforming the cryptocurrencies. Conclusion. This might sound familiar to regular viewers of this program and the platform in general. Conclusion: only public policy can close the racial wealth divide. This conclusion received some support from the survey from the Pew Research Center, which found that about half of cryptocurrency investors report that their investments have performed worse than they expected. Remember, even the sister I ran into at the restaurant acknowledged a $30,000 personal loss on crypto. This conclusion received some support from a survey of Pew Research Center. This dynamic leads The Atlantic to conclude that Black investors piled into the crypto market at or near its most recent top, and that likely thousands of Black investors have seen the value of their crypto investments plummet. Yeah. And unfortunately, that would be predictable. So I will show you the Pew Research study, which I didn't look at too closely, and mostly survey data, but 46% came out at the end of last year. 46% of Americans who have invested in cryptocurrency say it has done worse than expected. So that's overall, all backgrounds. So I wonder, this is sort of baked into the question I sent to Austin this morning, that if 46% of overall investors report their investments doing worse, how then would this match up if juxtaposed with the claims of those in the Cryptoganda space who are or were promoting crypto to Black investors? In other words, what is Roland Martin saying now? What is Hill Harper saying now? What is Earn Your Leisure saying now? What is Ian Dunlap saying now? What is Reggie Middleton saying now? What are the gentlemen of crypto saying now? I don't pay enough attention to see how they're rebranding or what claims that they're making, but are they claiming that they're not part of this 46% overall? Who are and that they or are they saying that they were smart enough to diversify? I don't know what they're saying. About 3/4 of Americans who have invested in cryptocurrency cite diversification, making money as reasons for doing so. 42% of American men 18 to 29 said they invested, traded in cryptocurrency. And you see here, there's more Black than white in that age range in terms of men between 18 and 29, and even more Hispanic and Asian than Black. Just 2% of Americans and 6% of adults under 30 have bought an NFT. I hope Black people didn't buy NFTs. 38, what does that say? And 2% of Americans and 6% of adults under 30. Yeah. Anyway, so that would be, we'll see. I'll let everybody know if I hear from Austin. And I would appreciate, I do appreciate his and their work. And I appreciate that, most importantly, it confirms that I've been right all along. All right, good people, let's move on. Just want to do a relatively quick I told you so. So again, thanks to everybody who I've seen a number of people have sent me this story this morning. So thank you. And please let me know what you think by
put it in the comments.
And of course, I will catch you. And if you made somehow, let me know. Self-report. How did you do with crypto? Because that, of course, would be breaking news. All right, everybody. Catch you later. Peace if you're willing to fight for it, like Fred Hampton used to say. And again, most importantly, I was right yet again. Thanks, everybody. Catch you next time.
I mix what I like, what I like, what I like, what I like, what I like.